of its journey. Well, as the business world gets to the third quarter of the year, it's crucial to stay abreast of latest developments in tax regulations, especially when it comes to withholding taxes. Withholding tax, a crucial component of the tax system, plays a significant role in ensuring that taxes are paid promptly and accurately. And the failure to comply with these reporting requirements can result in significant penalties, a key motivation for employers to stay informed and adapt their payroll systems to meet their standards. But what more do we need to know about this? Well, let's get talking, and I'm being joined by managing partner at Creston Penable, Mr. Albert Folorunsho. Thank you so much. It's good to have you in the studio.
Thank you, Tolu. It's good to have me here again.
Yes. That document in circulation, immediately I saw it, I needed to get clarification from you and understand what it means. Yeah. Can you give us a brief insight of what this document is really all about? That's the Ministry of Finance Deduction of Tax at Source Withholding. What does it really mean?
So, deduction of tax at source means the tax that a person is liable to pay, particularly as it relates to company income tax. Yeah. Capital gains tax has also been included to some extent. Personal income tax, okay, and petroleum profit tax can be deducted at source by the person making payment to the beneficiary. Okay, withholding tax is it's not a form of tax, so we must clear that. It is just a method of collecting tax, and it has two major purposes. One is for prompt collection of revenue, and two is to curb tax evasion, so that more persons can be brought in. That will be dated, and it will probably reiterate when the provision or the regulation takes effect.
Interestingly, I understand that the WTH system is not new in Nigeria. What changes has this new regulation introduced in our tax system?
Okay, very good. Like you just stated, withholding tax has been part of our Nigerian tax system of collecting taxes at source. But, you know, there has been a lot of issues around the existing regulation as it relates to withholding tax. Again, more importantly, is the fact that there are businesses whose margin on their transactions have become so thin that the withholding tax, the tax being deducted at source, is almost more than what they should earn. And that is what you have seen in this regulation. Some institutions have been excluded, you know, from deduction at source. I mean, when they transact with you, you should not deduct tax from their transaction. That does not stop you from filing your return and paying your tax as and when due, but that tax should not be deducted. And a couple of other, you know, issues. I mean, clarification that has been brought into this new regulation. One, in terms of payment. It is only due for payment when payment is made, which means it is only when I'm paying you that I can withhold, unlike the old provision that says the earlier of payment and when the amount is credited. No, it is only when I'm paying or otherwise settled. Maybe I did some other things to make the payment, not necessarily in cash. Then the withholding tax, the deduction at source will be due at that point. That is one. It has also clarified specifically those who can deduct withholding tax. You must be a corporate body, either as a limited liability company, an enterprise, any form of organization that have employees, even though it's not specifically stated, including churches, mosques. Whether you are liable to pay tax or not, you are eligible to deduct. The exclusion have also been specified, particularly individuals. Individuals are not eligible to be an agent of government for collection. I know some states have tried to use that. You know, they have gone to malls to see people that have occupants of those malls, and they are engaging them as to who are the landlord you are paying to. Can you give us the details? In fact, when next you are making payment to the landlords, who most of them are not in the tax net, they were appealing to them. I know some states in the north that have tried it, and they are still looking forward to using it. But with this provision, it is not allowed really for an individual to deduct tax, you know, as an individual tenant, for example, using that as an example, to deduct tax from your landlord's rent. Okay, but of course, the argument is that Nigeria has not gotten to that level. But even Lagos State is also interested in that, where individual will begin to deduct withholding tax from rent, but that is not allowed by the provision. Maybe some other time that will be looked into, if they can justify that. Okay, so that's the major addition. And some items have also been reduced. The rates for some of the deductions have been streamlined and reduced, okay, comparing whether you are deducting from a resident individual or company or a resident or a non-resident person. Okay, the rates have also been streamlined and aligned. For example, director's fee, which used to be 10%, has been increased to, 15% and 20% for non-resident. Wow. This is just to ensure that as soon as you receive your director's fee net of the withholding tax, you are probably fully paid your tax to a large extent, because it's always more difficult to go ahead again and file your return, and then somebody is asking you for additional tax from the director's fee. Most of the directors, particularly those that are, retired, they feel that immediately they receive their director's fee, they shouldn't be paying or be filing any return to pay tax. This has covered that to a large extent.
Then you've already started highlighting them, but what are the major highlights now of this new regulations?
Yes, again, like I said, some of the rates have been streamlined.
Yes,
depending on the nature of business.
Okay.
There's the controversy around transaction across the counter. Okay, what we mean by across the counter is where you engage in the transaction, where you pay instantly, either in cash or through electronic means. Okay, if you go to a mall or a shop to buy any item, okay, that is across the counter transaction. Yeah. Regardless of the quantum of the sum involved, withholding tax should not be deducted. Okay, that has been clearly stated in this case. Number two is the fact that individuals has been clarified not to represent government as an agent of collection. Okay. Another provision that has been stated here is under Company Income Tax Act, there is definition of small companies. That is, if your turnover is 25 million and below.
Yes.
Okay, yes. So this provision has stated that those set of companies should not deduct withholding tax, particularly where the person that they are dealing with has a tax identification number. If you have a tax identification number and the transaction is 2 million and below, that there is no need to deduct withholding tax, just to lessen the burden of the small-scale companies. But for a big company, okay, you are still obliged to deduct withholding tax from whatever the quantum of the transaction. So that is a very important point
to note. But let me follow up and ask you, sir, that is this regulation part of the expected outcomes of the tax policy reforms, of course, being undertaken by the Presidential Committee on Fiscal Policy and Tax Reforms, which you are part of? Is this part of expected part of the outcomes?
Definitely, we're working on a number of
a lot of
provisions, particularly the Nigerian tax, Nigerian administration tax.
Yeah.
This is one of the quick wins that should have been released long before now. Okay, it's been, this just find itself to the social media and fully signed. Okay, so we're just waiting for this to be gazetted.
Yeah.
So definitely this is part of it. Of course, you will see that by the time this provision is applied, more revenue will definitely go to all the arms of government, whether states, and particularly state and federal government. So it is definitely part of it, and it's supposed to make withholding tax deduction at source easy and straightforward. There is this controversy around what constitutes professional fee. Okay, can you just call a mechanic a professional and therefore apply 10%? The answer is no. This regulation has put a proper definition of what constitutes a professional management and technical service. It must be something that it must be a profession that is regulated, for which you receive or you obtain certification. Okay, so you don't call a repairer to mend your fridge, and then the tax authority is asking for withholding tax, at the rate of 10%. Those will now come under general services at the rate of 2%. Okay. Anything that is not specifically, aligned with any particular rate in the regulation will be at the rate of 2%. And of course, they have also looked at those industry where the margin are clearly very thin, particularly those ones that has to do with the supply of LPG, CNG, PMS, premium motor spirit, AGO, LPFK, and DPK. Those are, the margin is thin, and so they have been excluded from deduction of withholding tax when they are supplied.
It looks good, but prior to these new regulations, there have been issues around the practicability of the WHT on some transactions, of course, as well as inability of tax authorities to define what constitutes ordinary course of business. Do you think this regulation, as it is now, has finally created a path for smooth implementation of the WHT rule in our own tax system?
Definitely. When we talk about ordinary course of business, it says that in this regulation, if you are a manufacturer of what you are supplying,
yes,
you are a manufacturer of, maybe you supply a water tank to another company, and you are the manufacturer, withholding tax should not apply, because that is what you are doing in your ordinary course of business. Okay? So this regulation, to a large extent, has covered that. And those that have not been defined will just be at a flat rate of 2%, which, well, it will reduce, the incidence of having to go after the tax authority for a refund of overpayment of tax, because we know that the process of claiming refund from tax authority has never been straightforward. It has to come with investigation and all that. So if less is remitted in terms of deduction at source, okay, it will reduce situation where taxpayer will have to start going after the tax authority for refund of tax, which they may never get, or sometimes after so much investigation and rigor.
In your own opinion, what do you think really will be the impact of these new regulations, of course, on both government and the taxpayers? Okay,
so for me, the taxpayer will definitely welcome this, okay, in terms of the rate, which for some of them have been streamlined to align with the nature and the margin that is applicable or associated with such a business. Two is the fact that you now know specific definition as to across the counter transaction, what constitutes ordinary business, the professional services has been fully defined. And so when you have full definition of this, the taxpayers are always going to be ready to comply. The tax authority too, this will enhance their collection, even though I hear that some have complained about, the exclusion of transactions that are below 2 million. It is not an exclusion. It is only limited to small companies dealing where the business they are dealing with has no TIN, okay, and the transaction is below 2 million. So the exclusion is very limited. Okay, so I expect that with this regulation, more revenue will even accrue to the state and federal government in terms of collection of withholding tax. Again, capital gains tax, which is relevant where there is compensation for loss of office, where the service of an employee has become odious and such person has been laid off, and a severance pay, specifically for loss of office. The person making the payment is now obligated to deduct with capital gains tax at the specified rate, 10%, and remit to the relevant tax authority. Before now, that provision is not there. Again, it has also been clarified that if you are, if you are an agent, okay, and you deduct your fee before you pay to your principal, particularly if you take an insurance business as an example, the insurance agents, when they collect premium in certain circumstances, they take off their brokerage fee and pay the premium, the net amount to the insurance company. Most times, the tax authorities still expected the insurance company to remit withholding tax on money that has been deducted upfront. This has stated that clearly it is impossible. Okay, if you have an account with a bank and they charge you interest, when they charge you, when they pay you interest, they also deduct withholding tax. Okay, and so when it comes to loan from a bank, you should not be, and this has also clarified that you will not be liable to withholding tax because the bank has already deducted it up front before your account is credited. These are some of the pending issues in the old regulation, which has now been tidied up by this regulation.
I think I'm even getting more clarity also around this. But as a tax practitioner, what would be your advice to taxpayers on this regulation?
Well, so take it on board. For me, it is mostly business-oriented. Okay. And all of the businesses will be happy about it. I know the state complained about even the difference in the date for remittance to FRS and the date for remittance to the state. That has always been the provision. That can be something to look at another time. But as far as the businesses are concerned, this is definitely a welcome development in terms of the rate, in terms of the clarity on some situation and definition around when to deduct, who to deduct from, which transaction to deduct, and what is the applicable rate. And you also have an umbrella rate that says that any one that is not specifically under any specific category under the schedule, we just apply 2%. And again, for businesses, for government, it is not only about revenue generation. Withholding tax is not about revenue generation. It is for prompt payment, but of course it's to widen the tax net such that anybody doing any business with any company will be captured. And it also says in this provision that if you have to pay anyone that does not have a tax identification number, instead of deducting 10%, you should deduct 20%. That will make the person to go and register with the relevant tax authority immediately so as to avoid twice amount that should have been deducted from their income. For me, it's a welcome development.
I don't think we've had you in since Crystal Pedable when this integration and all of that. How has it been? How is it? And what should we be expecting more from Pedable moving on?
Well, Pedable is on the rise. Of course, we're going to different lines of businesses in addition to what we have, which we are still running, the normal audit, tax, and advisory. But we're dwelling more now on more advisory aspects. And we're gaining traction with our relationship with Creston. And it's not bad.
Well, it's not bad. Again, before I let you go, you talked about widening that net. When Nigerians hear, or taxpayers hear widening that net, they're always like, there are some places too that the government can, or tax agencies can get funding or get more tax revenues than expanding that net. So what would be, again, your message, or how can government, let me give me a message now, expand that net in a way that people won't pay more? Some people are already paying. Is that possible?
So the focus of the Reform Committee is not only about increasing tax revenue, it's about reform. You know, we talk about, there has been story around the VAT system being proper VAT.
Yes.
That is not about increasing revenue per se. You want it to move away from what looks like a sales tax to be a proper VAT where you have the output and you are allowed to deduct all your input. So if that is implemented and the existing rate, or maybe a slightly increased rate is government may even have to take a cut. But at least you will have seen that proper reform in terms of VAT has taken place. The same thing is, expected on all the other taxes. Clarifications are being made in the company's income tax, in the personal income tax. The capital gains tax that seems to be a little bit less popular, will become something that everyone will take seriously, including stamp duty that most governments and states are more interested in. And of course, like has been stated, we expect that if all of those reform provisions are taken on board, at the level it is now, is a review of the draft that has been done by the other ministries, particularly Ministry of Justice. Thereafter, before the bill will be made public will have their own say through public hearing and for adjustment to be made. And thereafter, maybe the passing of the law before the law will come into effect. All of those are still ongoing, and we are still within time as specified by the President.
Wish you all the best with the committee and all that. Thank you so much. I'll be speaking to Mr. Albert Folorunsho. He is a managing partner at Creston Penable. Yes, managing consultant. Yes, at Creston Penable, Mr. Albert Folorunsho. Thank you for being on the program today and making us understand this so very well. We appreciate your time.
It is my pleasure. Thank you.
All right, let's take a break. When we come back, we'll talk more around the newly inaugurated